we have an expert joining in to watch the markets better. Gautam Shah, Associate Director and Technical Analyst of JM Financial, joins us. Good morning, Gautam, and congratulations. You were bullish on the markets and 8,600 is here.
Yeah.
But the question now is, should one alight from the train because it's given you so much gains and it has picked up too much speed too soon? Good to take money off, or are there still more gains by staying on?
Good morning and thanks for that, Lata. Yes, I think the move has been pretty spectacular, and not only in the last few weeks but since the start of this year. I mean, it's quite phenomenal that you have a market that has moved up from a level of 6,000 to about 8,600 odd levels today without a correction of more than 5%. So I think it's been an excellent move, and I think thankfully we've been able to really tag along for our clients, and at no point of time did we get an indication of the market stopping out. Obviously, the news flow has been very supportive. It's actually got better and better. The momentum has been great. The support from the global markets have been excellent. And obviously, commodities have only helped the equities, move further up, particularly in the last couple of months. But I think at some point of time, the markets had to get to a level, where you really, sit back and take a call whether you want to really participate anymore or not. I think at this point of time, at levels of 86, 8,700, just about too many technical studies have come to a point to suggest that this could potentially be a top. I think this zone of 8,600 to 8,700 is a wall of resistance, and I don't think it's going to be very easy for the market to clear this. If you look at the technical charts, I think none of the technical indicators are actually making a higher high. Yes, the price action has done very well in the last couple of weeks, almost making a higher high gradually on a daily basis, but the technical indicators are exhibiting a completely different story, and this typically happens at the top of any bull market. However, I think it's all about the momentum right now. I think we saw it in the last quarter of 2007 and early 2008, and when the momentum is very strong, you really do not fight the momentum. So what we've been recommending is to take profits. I think in this 86, 8,700 zone, I think is a great area to be taking serious profits, because I think the next couple of months is going to be all about protecting returns. Apart from the technical studies, I think if you look at the F&O data in the month of November and also in the second half of October, I think the market was extremely hedged. So it was very difficult to expect the markets to really start a major correction. But as we started off the month of December, if you look at the F&O data, the market is pretty light. It's not as hedged as it was some time back. And that is a sort of an indication, that the bulls are extremely confident, or I should say overconfident at this point of time. Even from a sentiment perspective, after what happened last Friday, the blow-off move, the spectacular 80-100 point move, I think that's really converted even a lot of bears into the bulls. I mean, this obviously happens at the top, and there are enough jokes doing the round of how bad, the bears are faring at this point of time. So when you have all these factors come together, I'm strongly of the opinion that the markets are unlikely to see substantial upside from here, and this bull market, which clearly has many more legs to go on the upside, I think is going to pause and retrace. And if it does that, I think it's going to be a great setup for the budget, because I think the next 4 to 8 weeks might be a little on the corrective side. Having said that, you should not be fighting a trend in a bull market. So I think what we are recommending here is booking profits. But at any point of time, if the Nifty were to break 84.30, which I think is an important level for the next couple of weeks, that would be the first indication of entering shorts, because then you could have the Nifty go down to a level of 8,200, potentially even 79, 75 and lower.
Okay, that's an interesting observation. So 8,600 to 8,700 could be a potential top. Gautam, hi, morning. What about the Bank Nifty? As we speak, there's a significant outperformance from the Bank Nifty, currently at 18,650. What would be the levels to watch there?
Well, Sonia, when I was in your channel the last time, we had given a target of about 19,000 for December 2015 for the Bank Nifty, and we are at December 2014, and the Bank Nifty has actually got close to that particular level. I'm strongly of the opinion that the Bank Nifty charts are also not supportive with what the price action is doing right now, and therefore in this 18,500, 19,000 band, I think is a good area to be booking profits. Yes, I think the momentum has been strong, and this has really been the Pied Piper of the market, but when when we look at the weekly and the monthly charts, I think Bank Nifty has really done most of its targets based on indicator, Elliott or pattern studies, and therefore this is really an excess, and typically excesses last for a few percentage points, and that's the reason I believe that closer to that 19,000 mark on the Bank Nifty, I think would be a good opportunity to profits. I think tomorrow is going to be a big day. Obviously, just about everyone is talking about it, and if tomorrow the market does not get what it wants, I think then the Bank Nifty might just be under severe selling pressure. So I would be extremely careful there.
Oh, okay. Yeah, there is that event to cross for sure. A word on some other global indicators, Gautam. What's the crude chart telling you, and what is the S&P 500 chart telling you?
Well, if you look at the US markets, they have really not done anything substantial. I have to admit that I'm a little surprised that the US markets have gone to make a higher high, and they are trading at, lifetime highs at this point of time. But once again, the chart setup is just not supportive. I mean, if at such a level, you don't have the kind of momentum that should actually exist in the US markets, and you have the Dow sticking to that 17,700, 17,800 band, where there is a lot of resistance, and even the S&P 500, I think running into that 2070, 2100 band, I think there is going to be a lot of selling pressure, and at any point of time in the next 5 to 10 trading sessions, you could actually see a knee-jerk reaction in the US markets. It's difficult to pinpoint what could be the trigger, but at least the charts are giving you an indication that there is some problem somewhere, and I think you are going to see an effect of that on the price action very soon. Crude, I think, is a very big factor, because these days, in the morning you see what crude has done, and accordingly you take a call on the Indian markets. I think crude is also getting close to its target. I think 60-65 on the NYMEX crude is a multi-year support, and that breakdown that took place at around levels of 90, I think had a target of around 67-68. That has been done in the last 2-3 trading sessions, and therefore around 60-65 we actually see NYMEX crude settling down. I know there will be people in the market, who talk of substantial downside even from current levels, but I think it's looking very, very overdone. And when I look at crude, I think you also need to look at what the rupee has been doing, because Indian markets equity markets have done so well, and you have the rupee, appreciating or depreciating beyond 62 levels on Friday. I think that is an indication that maybe you will see a round of depreciation, and you could actually see the rupee, depreciate to levels of 63.5. And I think that's really the indicator of where the markets could head in the next 4 to 8 weeks. And given all of this, I think it all really boils down to the dollar index, which had a breakout at around 82, 82.5. The target for the dollar index is around 90. We are already at 88.5, and once the dollar index moves to 90, I think there is a chance of a top out. And if the dollar index does top out, I think it's going to have a significant impact on commodities and equities, because then commodities will start to rise and possibly equities will start to fall.
So then, Gautam, just one final question. If you could tell us, since you are slightly cautious on the market, if we do see a dip, then which are the stocks that you would go ahead and buy?
Well, there are 3 sectors which we are advising our clients at this point of time, irrespective of our view on the Nifty, because I think even if there is a correction, I think these 3 sectors will do well. Firstly, I think pharmaceutical, obviously it's a defensive name, and it's done well in the good and the bad times. So this is one space which still has a lot of steam on the upside, and I think in case of a 5 to 10% correction on the index, it will see a lot of outperformance. Secondly, I would like to go with capital goods. I know it's a high beta name, it generally moves with the market, but given the kind of breakout that we saw a couple of months back, I think capital goods as a space is going to outperform for the next 6 to 8 months. So in case of a market decline, I think this is one of the best bets to accumulate for the next 6 to 8 months. And finally, I think it would be auto, because auto has shown that it does well in the good and the bad times. Still a great chart, even at a level of 19,000 on the BSE Auto Index. And I think every small decline of 2-3-5%, I think should be used to buy there.
All right, Gautam, that's a handy list that you have given us, as well as an overall caution that perhaps the indices are about to top out, at least for now. Pleasure speaking with you as always. Thank you very much for joining us and spending this morning with us.